This is Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Sydney. The top stories this hour. A cautious open ahead for Asia as investors await high-stakes US mega-cap earnings, looking for evidence that the AI-driven boom can be sustained. Trade in focus, with the Philippines securing a 19% tariff deal as President Marcos visits the White House. The Treasury Secretary to meet Chinese officials next week for a third round of trade talks, with Scott Bessent saying he expects an extension to their truce. Plus, Microsoft accuses Chinese-sponsored hackers of a campaign of global attacks exploiting flaws in its SharePoint software.
Take a look at how we're setting up for the market opens across Asia. We have seen some volatility in Asian markets, of course, continuing as we are factoring in the trade negotiations happening between Japan and the United States right now. We know that the top Japanese trade negotiator is in the White House for those negotiations at a time when, of course, we're also following the European Union-Japan summit here in Tokyo as well this week. We have seen the Nikkei under pressure for the last two sessions. We're seeing a little bit of gains for futures, up 0.1%, while the Japanese yen is holding steady at that 146 level against the US dollar. But of course, what we'll be watching are JGBs, because we have seen the significant pressure on the long end part of JGBs. And we do have a 40-year bond auction today, which will sort of give us a test of demand when it comes to appetite for these long-term debt. But take a look at how treasuries are also trading, because we have seen it gain ground for the last 5 sessions in the Wall Street session. We were watching, of course, U.S. stocks as well. We continue to hear from Secretary Bessent his support for Chair Powell, as we're seeing more constant attacks from President Trump as well. But as Heidi mentioned, it's all about those tech earnings, and we are expecting the Magnificent Seven to actually see a 14% rise when it comes to profits for the second quarter. Now, President Trump says the U.S. has reached a trade deal with the Philippines, setting a 19% tariff rate on the country's exports. He announced the agreement after meeting with President Ferdinand Marcos Jr. at the White House. For the latest, Bloomberg's Ryan Chua and John Harney join us from Washington. Ryan, let me start with you. So how much of a win is this for the Philippines, given that the threat was about 20% and we just went down about a percentage point?
Well, there's no official statement or readout yet from the Philippine side, so we don't know how they're officially framing this. But it's certainly not a huge drop from the 19% or from the 20% that President Trump had threatened to impose, and it's still higher than the 17% that was announced back in April. But what we do know so far is a report from local broadcaster ABS-CBN. They're saying that President Marcos spoke to the press shortly after that meeting with President Trump at the White House, essentially confirming the deal and describing it as a, quote, significant achievement. And according to that report, Marcos also clarified that the zero tariffs that Trump announced on social media will only apply to specific or certain products, including U.S.-made cars. Now, it's important to note that Philippine officials previously said that they won't be able to offer zero tariffs for U.S. products because it would hurt local businesses, but that they are prepared to increase purchases of U.S. farm products and boost exports of semiconductors, as well as coconut and mango products to the U.S.
So, John, you know, Shery kind of poses the question we're all asking. The threat initially was 17%. It then went up to 20%. We've gotten down to 19%. Do we get an idea of how sort of hard President Trump and his colleagues are negotiating here with these foreign leaders?
Well, there seem to be very few exceptions, very little leeway for these trading partners and allies. Of course, the Philippines has long been a friend of the United States and close ally. So, I mean, this deal may have been the best that President Marcos could get. But it certainly isn't ideal, and he's got to go back to Manila and basically explain this to his countrymen, and this may be seized upon by his political opponents. Now, other trade partners, Japan's top trading negotiators at the White House as we speak, to try to reach an accord there. In the meantime, this August 1st deadline is getting ever closer, and so far, we've seen very few of the 90 deals in 90 days that was bruited about back in April.
In the meantime, John, are we seeing sort of a softer stance when it comes to negotiations with China now that they at least have a framework? We're expecting more conversations next week.
That's right. Secretary Scott Bessent said he is going to Sweden for the third round of these negotiations, this truce, not a full agreement with the Chinese. Now, of course, this is a much more lenient approach to the second largest economy that the United States is taking here. Now, Secretary Bessent said, discussed some of the things that might be on the table, on the agenda. And he did say that trade is going very well. It's in a good place, I believe are his words. But I was struck by that among the discussions would be oil sales from Iran and Russia. Now, this suggests that, again, the Trump administration is taking a different stance, a harsher stance, with President Vladimir Putin and his continuing war in Ukraine and the lack of progress toward a ceasefire, let alone the end of the war.
Ryan, we know that China and the Philippines continue to have these encounters in the South China Sea. Do we know if this came up in these bilateral talks in the broader scope around regional security?
Definitely did. In fact, President Trump, in his Truth Social announcement today, made a reference to working more closely with the Philippines militarily. Now, he didn't provide more details, but a bulk of the discussions and the talks that President Marcos held here in Washington had to do with boosting security ties and promoting peace and stability in the Indo-Pacific region. Obviously, all of this will have a reference to China. Now, during that White House briefing earlier today between the two leaders, President Trump said that he doesn't mind if the Philippines gets along with Beijing, if only to promote its own interests. But he did praise Marcos for his efforts to bring the U.S. closer to the Philippines after his predecessors moved to pivot the Philippines toward China. So there was all of that references, and the presidents, those two presidents made sure that at the end of the day, that long-standing alliance will stay strong despite all the differences that they had. And in fact, President Marcos had really tried to leverage, to highlight this long-standing alliance to secure better trade terms for the Philippines.
Ryan,
thanks, Ryan.
How's the Philippine economy and politics doing right now, and how are we expecting the public to receive this deal?
Well, President Marcos came to Washington under pressure to deliver an economic win. He is certainly trying to do that because of political pressures after the midterm elections. He's also seeking to grow the Philippine economy to above 5%, which obviously will be set back by higher U.S. tariffs. So there's likely to be a lot of criticism domestically about the outcome of these talks. Already we're hearing from some analysts criticizing the outcome, saying that the Philippines might be getting the shorter end of this deal. But obviously, based on what we know so far from local media reporting, Marcos is still seeking to treat this or seeking to frame this as a win for his administration.
Bloomberg's Ryan Shah there with John Harney with the latest on these trade negotiations. And some of the other trade-related headlines that we're keeping track of. Thailand says it's close to a deal with the U.S. to lower a threatened 36% tariff rate before the August 1st deadline. The Thai finance minister says talks should conclude within days, and he expects a reduction in line with their Southeast Asian neighbours. Thailand has offered to increase purchases of U.S. goods and expand zero tariffs on American imports. The Trump administration says its trade deal with Indonesia will unlock $50 billion in market access. An official tells Bloomberg that Jakarta will eliminate all non-tariff measures on U.S. goods and drop barriers that could have hit American tech companies. President Trump announced a deal for a 19% tariff rate last week, but we're told it will only be implemented in the coming weeks. China has suspended its antitrust investigation into the local unit of DuPont ahead of next week's trade talks with the U.S. in Stockholm. The inquiry was among a flurry of countermeasures Beijing announced in early April to hit back against President Trump's so-called reciprocal tariffs on Chinese products.
And coming up on the Asia trade, we look ahead to the EU-Japan trade talks in Tokyo today. UBS Wealth Management also explains why they're confident that the bull market in U.S. stocks has legs. And the Asian Development Bank shares their views on the impact of regional trade deals. Much more ahead. This is Bloomberg.
I think that concerns that there have at some points been overreach in what you might think of as public policy liberal arts are quite legitimate. And I think Secretary Bessent is right to be raising a question there.
Well, the key focus being on trade. That was a Wall Street Week contributor and former U.S. Treasury Secretary Larry Summers talking about also the impact when it comes to the scope of the Fed's independence, given the ongoing pressures that we've seen from President Trump and the White House. This is what we're watching when it comes to these ongoing negotiations. Of course, a number of countries, including that 19% deal struck with the Philippines, with President Marcos visiting the White House. But we're also watching the trade negotiations with Japan, with the chief trade negotiator entering into the White House to discuss tariffs with President Trump. We're getting that update now. President Trump to impose a 15% tariff on goods from Japan. We're seeing the move in terms of the yen gaining against the dollar. In an announcement on his social media saying we've just completed a massive deal with Japan, perhaps the largest deal ever made, including investment at his direction, $550 billion into the United States. He says that they'll receive 90% of the profits. It's not clear what that means, but the imposition of a 15% tariff on goods from Japan, $550 billion investment into the US. They'll be opening up Japanese markets to trade, including cars, according to the president's statement, and reciprocal tariffs will be paid to the US of 15%. So really talking about what he's characterized as a massive deal with Japan, perhaps the largest deal ever made, saying that it's a very exciting time for the US. And we know that this, of course, has been an ongoing source of tension between the two traditional allies. It also comes just days after the historic election loss for the Japanese Prime Minister Ishiba in the weekend's upper house election as well. The trade negotiator from Japan meeting with Scott Bessent, the U.S. Commerce Secretary Lutnick as well. Bessent had said he wouldn't be surprised if we're able to iron out something pretty quickly. And it does seem like we're getting that confirmation, at least from the U.S. side, through Donald Trump's social media, if not from Japan. We'll be waiting for that confirmation as well. Let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. So this is just crossing the Bloomberg as you've sat down to have a chat with us. Your first reaction to sort of remove any sort of meaningful concern that has been really, overshadowing Japanese assets?
Well, it does, in particular because the tariff rate that was in the letter to Japan was 25%, and there was always some anticipation that once Japan's elections were out of the way, that would make it easier for the Japanese side anyway to do whatever it needed to do in order to come to some sort of a deal. And 15% is lower than 25%. It's lower than most of the other deals that have so far been announced.
Better than perhaps the compromise with the Philippines?
Yes, they've done better than the Philippines, it would seem. But then they've, because they've promised $550 billion of investment, which is, that's one of President Trump's favourite things that he wants. In particular, they'll be under his direction. And
cars as well.
Yes, and cars, yes. Although the big question is, even if they do make US cars available in Japan, will Japanese consumers buy them? That's a big question. And with all of these deals, there tends to be a fairly long lead time ultimately between the big announcement of the agreement and the implementation. But more importantly, the tariffs are going to come into place, and the tariffs going from 10% as they are now across the board to 15% instead of to 25%, that's obviously a bonus for Japan, which is a very export-oriented economy still, so that's going to be a big help for them. I didn't see any details on what it does as far as tariffs on steel, aluminum, automobiles, which are set at 25% for automobiles, I believe, and 50% are going to come in for steel and aluminum from 25% now. So those are still burdens, but I don't know if anybody was expecting those to go away. So for Japan, it's promising. For the rest of Asia, it might well be promising. It underscores that Asia is actually getting more of these deals agreed, and even if the tariffs are going to be more than the 10% base rate, they're coming in significantly lower than the threatened reciprocal tariff rates. So from Asia's point of view, that's potentially good news. And if nothing else, if this does bring more certainty than we have seen in the tariff sphere, that's also going to be a benefit for those countries. And the ultimate impact on the US economy, both as far as growth and inflation is concerned, is something that we're going to be looking to see over the coming months. But in the short term, most Asian markets are going to look at this as a plus.
And you can see right now Nikkei futures jumping at the moment, of course. And you mentioned those car tariffs. Of course, we have no clarity right now if those 25% sectoral tariffs on Japanese cars will actually be reduced. We only know that the deal includes cars. What does that mean? U.S. cars coming into Japan, or those tariffs being reduced? We know that the collective impact on car makers this year because of that 25% tariff could have been about $19 billion for Japan. And that's a huge part of the Japanese economy, right? So when it comes to the equity markets, Garfield, when it comes to investors looking at Japanese markets, do you get more confidence, especially on those exporters, the big Japanese car makers, depending on what the details of this trade deal is at a time when, of course, we have also more fiscal concerns also pressuring the JGB space as well?
Yeah, well, as you outlined, there's a lot of things that need to be filled in on the details front. Even if you assume that 25% tariffs on autos stay, this is still good news for Japanese equities. If those all come down to 15%, then that's great news for Japanese equities, because that's a significant improvement over what there had been. Also, the potential, because you can't really be sure about a lot of things with President Trump, but the potential that the uncertainty is right there. Like, we have the rules in place. That will be a big help for Japanese companies and therefore investors in Japanese shares. As far as the JGB market goes, this could also be a plus, because one of the things that's been making the JGB market so difficult is the concern about what the Bank of Japan does. In a lot of ways, it should be looking to raise short-term interest rates. Its reluctance to do that in the face of still very elevated, in the face of elevated inflation, elevated enough that it's definitely on target for its long-term goal of keeping that high, well, higher than it used to be. That has put a lot of pressure on the long end of the JGB market because of concerns about inflation and about what's going on with BOJ policy. So that could be a major positive. We've got a 40-year auction today, which was already looking like it might go off okay because the global bond route had slowed down. In fact, it reversed a bit. So this also at the margins makes the JGB outlook a bit more positive, especially at that longer end, which has been the pain point.
Yeah, Bloomberg's Garfield Reynolds there with the outlook for Japanese markets, the JGB market, equities, as well as we get these latest lines when it comes to those trade negotiations with the United States. We're now hearing that Japanese goods will be taxed at 15% for those products going into the U.S. President Trump saying that Japan will open the country to trade, including cars. What that means, we're not quite sure yet. We know that there's a 25% tariff on cars and car parts from Japan, which has had a big impact on on the Japanese economy. We're talking about car makers seeing an impact of $19 billion this fiscal year, and this auto sector, of course, here in Japan, employing 5.6 million people. We're talking about 8% of Japan's workforce, generating around 10% of GDP. So getting more details about the car agreement will be very important. As you can see right there, we are seeing Nikkei futures to the downside, but we had seen a pop earlier while the Japanese yen is right now holding steady at that 146 level as we follow also that 40-year bond auction that we'll get today. This is Bloomberg.
Let's get you latest headlines that we're watching from the corporate front. And Texas Instruments shares falling 7% after issuing a disappointing third-quarter forecast. The chipmaker says automotive and industrial demand isn't bouncing back as hoped, while US-China trade tensions continue to cloud the outlook. Though second-quarter results beat estimates, heavy capital spending and global chip rivalry are squeezing profitability. SpaceX's latest tender offer includes a new warning. Elon Musk may not be done with US politics. According to the documents, Musk may serve in a similar roles to his past work with Doge and devote significant time and energy to that. This appears to be the first time SpaceX has included such risk factors into its tender offers. The most recent offer values the company at about $400 billion. Japan 7&I is responding to claims that it stonewalled a $46 billion bid from Canada's Couche-Tard. The 7-Eleven owner says the suitor didn't grasp Japan's regulatory landscape and chose to walk away. 7&I now says it's focused on a standalone turnaround, including a 2 trillion yen buyback and new leadership after Couche-Tard abandoned what would have been Japan's biggest foreign takeover. China's top medical device maker Mindray is weighing a second listing in Hong Kong that could raise at least $1 billion, according to people familiar with the matter. A Hong Kong listing would add to a wave of deals. It's already topped $16 billion this year. Mindray shares have fallen more than 50% since their 2021 peak, and 2024 revenue missed estimates, Shery.
Heidi, take a look at how Japanese assets are trading at the moment. We are about half an hour away from the market opens. We are already seeing really that reaction from the trade headlines that we got with President Trump talking about 15% tariffs on Japanese goods, not to mention that he's saying that Japan will open the country to trade, including when it comes to cars. We can see Nikkei futures now gaining 1.4%. And of course, we've been watching the Japanese yen, which strengthened in the immediate aftermath of the headlines, but we're now seeing a little bit of downside pressure. Of course, we have seen the upper house elections over the weekend bringing more political risk into the forefront here in Japan. We are watching those JGB yields as well. Super long bonds continue to fall. We have that 40-year bond auction today as well, testing investor appetite and what the trade headlines will do for Japan and the broader economy, as this auto sector is now comprising 10% of Japan's GDP, will be a key question as we get the details of that trade deal. This is Bloomberg.
Take a look at what we're watching when it comes to commodities. Of course, one of the core stories has been this rally that we've seen in iron ore rising to that 5-month high. We're seeing a little bit of a pullback when it comes to Singapore-traded iron ore contracts at the moment, but there has been broad signs that supply-side reforms in China may finally be gaining traction. We're seeing that boost to raw material prices more broadly, but iron ore in particular has been seeing that close correlation as well. Some dam project news from China also helping. High liquidity is also helping there as well, but that sentiment boost definitely being seen when it comes to the supply-side reforms for Chinese steel industry policy. We're also seeing a little bit of a sort of boost potentially coming through later on today with the iron ore output from Vale edging up as well with some of the mine outperformance there. We're also watching gold potentially seeing a little bit of a pullback there, even as we've seen that gain alongside the weaker dollar. Of course, a little bit more sort of positive sentiment when it comes to trade, given a deal has been reached with the Philippines and the US, and now also President Trump saying that a deal with Japan has been reached in this 8th round of negotiations taking place with the chief trade negotiator at the White House at the moment. That tariff rate set at 15%, and that is, if it sort of comes to fruition, a pretty significant improvement on what had earlier been threatened. New York traded crude at the moment, the outperformer across the broader commodities complex. They're edging higher by just about 0.5%. Really, investors continuing to see that progress being made on trade talks between the US and its key partners, and some of that Japan news, Shery, will be helping sentiment.
Yeah, but you said it, Heidi, we need to see the details, right? Because we have come down from that threatened 25%, which initially was 24%, and now we're, at 15%? Still relatively better than the 19% that the Philippines got, down from 20%. But I guess it's really difficult to make these comparisons because you have to look at the details, and right now we don't have the details. President Trump now saying that Japan will open the country to trade, including cars. What does that mean? Will Japan bring in more American cars? Will that be allowed? There were talks about safety standards being lowered and so forth. But we are also watching, of course, a 25% sectoral tariffs on Japanese cars going into the United States. That was supposed to have a collective hit on Japanese car makers of over $19 billion this fiscal year. Some of those very exposed were the likes of Subaru, of course. And you can see right now Nikkei futures pointing to the upside of more than 1% in Chicago and Singapore, almost 1% as well. Does this change the calculation when it comes to the Bank of Japan will be the key question, because remember, the Bank of Japan has not moved in terms of normalizing policy and hiking rates because of the uncertainty coming from tariffs. That was a big part of the BOJ's calculation, but we've had core inflation above 2% for about 3 years already. So will this move the needle when it comes to more certainty for the Japanese economy? Will BOJ Governor want to actually normalize policy faster? We'll get Tokyo CPI this week on Friday, so we'll be watching out for that while the Japanese yen is holding steady after that little pop that we saw earlier, Heidi.
Yeah, we're still seeing quite a bit of vulnerability when it comes to JGBs as well, right? The fiscal concerns over fiscal largesse and the implications of opposition parties now having greater influence given the disastrous result for the government and for Prime Minister Ishiba, who's still hanging on there. So we're seeing that vulnerability to further selling potentially when it comes to Japanese government bonds there as well. The fiscal expansion risk continuing to simmer in the market. The election results seeing that we could see even further selling pressure when it comes to JGB. So we'll be watching the trading when it comes to 20 and 40-year bonds particularly closely in the coming days. He's still hanging on as leader. On the one hand, it's a measure of continuity. On the other hand, there needs to be a placating of opposition lawmakers, and we're sort of awaiting to see how that develops, right? But, you know, Shery, you talked about some of the sort of pressure points when it comes to these trade negotiations between the US and Japan that President Trump did mention in his social media post. Lots of questions about what this access to the auto sector, trucks, really means, right? You talked about how sensitive that is. I'm also wondering about rice because, you know, as you've investigated, rice is not just simply a commodity for Japan. It's really, you know, a bit of a national kind of cultural fixation and point of pride, right? What does access to the rice market for the US actually mean?
If there will be any access, right? Because we have seen, of course, as you said, is a point that raises a lot of nationalism in this country, right? Japan and Japanese farmers is very important when it comes to those rice grains and what really importing from abroad will mean. We have seen the price of rice, though, as you said, double over the past year. So the need is there. Whether or not that market can actually be opened is another question. We are still trying to understand what including cars means for this trade deal. We know that that part of the economy is about 10%, generates about 10% of Japanese GDP. So we'll have to continue to watch what the details entail. But what's interesting is that the Japanese yen, as you can see there, has weakened 0.2% after that initial pop higher against the US dollar, perhaps because of all of those risks. You talked about the 40-year bond auction that we have today, but we have seen that really increased pressure when it comes to the long end of Japanese bonds because of those fiscal concerns. The upper house elections sanctions, just really raising the political instability in this country and what that means when it comes to the Japanese yen. We have seen a little bit of a more bullish trend form after the upper house elections, perhaps because the election is out of the way. But what that means in the long run will be a key question. But let's discuss all of this with our next guest, Atsuko Higashino, professor of international studies at the University of Tsukuba, who joins me right now in the Tokyo studio. And I know, Professor, that you're joining us to talk about the EU-Japan summit coming up. But at the same time, of course, we have now these trade headlines coming from Washington, 15% tariffs on Japanese goods. Is that a good outcome for Japanese negotiators?
Well, not of course, we are expecting a very mixed response from that, because despite Mr. Akazawa's, the number of negotiations, it came with a 15%. So many people would have expected a better result, of course. And we are, of course, at the right in this juncture. We are at the right after the parliamentary election. And the result is very disastrous for the current government. So the voice can be very, very harsh for that, yes.
We just mentioned a few of the items that were sticking points in these negotiations. We still don't have the details, but how important is it that Japanese negotiators held strong when it came to some of the most sensitive issues like rice and cars?
Yes, rice and cars, they are both very, very important, of course. And when it comes to rice, there's a lot of confusion, even within the Japanese domestic politics, including the rice, who used to be reserved for purposes and etc. So we took it as a very, very mixed message from President Trump. It does really seems to be, for some people, that President Trump is trying to be very cooperative for being not that harsh, but still, rice is something very symbolic for Japanese people, most of the Japanese people, in particular for the Japanese farmers. So there can be a longer-term turmoil for that. So that could be probably not heading to the solution, but also it is still in the middle of the huge confusion, which is going to be lasted for a long time.
I suppose, in a way, it would have been worse if this deal, if it does in fact include meaningful concessions on agriculture, rice and autos, came before the election, right? It was already a disastrous result. Do you expect this to potentially compound that?
Yes, of course, I think so. But as you can see, Japanese, in many perspectives, the Japanese are not really ready to confront this result at this moment, because we don't really still know whether Ishiba government can continue or not. So I don't really see how this could end up in the entire negotiations as a whole.
What are your expectations when it comes to the EU-Japan summit, given there's so much other noise and distractions happening at the moment when it comes to these negotiations with the US?
Yes, originally, EU side was expecting to have two very important issues, which is one is free trade, and the other one is economic security. The other additional two important things are security and defense, and the support for the rule-based international order. But this summit, in the end, came at a very, very disastrous moment that we could think of, because I don't really think that Ishiba government is really ready to have this very important summit between Japan and the EU, because of the turmoil immediately after the end of the parliamentary election. So it could have a very important, which we could have expected the very solid and very technical but important progress on every single sort of aspect. And also where Japan and the EU are facing the common challenge together, for example, the Trump administration and Russia's aggression against Ukraine and Chinese expansionism. But I don't really think that the Ishiba government is ready at all in order to confront all these issues with the EU.
How do you expect that? how do you expect the Japanese public to receive this trade deal with the United States?
The United States. Of course, this deal as a whole is always expected very, very critically by Japanese audiences. So, but at the same time, it changes a lot. So Japanese audiences are really looking at it critically, but at the same time, they are already expecting that something is going to change in a very short period of time.
Atsuko Higashino, good to have you with us, Professor of International Studies at the University of Tsukuba, of course, reacting not only to that EU-Japan summit coming up today, but also to that trade deal that just broke in the last few minutes, 15% tariffs on Japanese goods going into the United States. And, of course, President Trump saying that the deal could include cars. We have no idea at this point what exactly that means, but we're seeing after hours Toyota gaining more than 2%. Of course, we know the Japanese car makers were some of the largest hit here in Japan because of the tariffs that were expected to cost about $19 billion this fiscal year. Subaru also one of the ones that has more than 70% of its sales coming from the U.S. So the auto sector will be one that we'll be watching at the market opens in about 20 minutes. This is Bloomberg.
Well, Microsoft has blamed Chinese state-sponsored hackers for a weeks-long global campaign of attacks exploiting vulnerabilities in its SharePoint software. The full extent of the damage isn't yet clear. Our Asia Tech correspondent Annabelle Drillers joins us now in Hong Kong. So what do we know about these hacks and what we've heard from Microsoft?
Yeah, so this is a software, just to lay it out, it's widely used by government agencies and also businesses around the world. Microsoft, as you said, it does allege that those hackers are from China. We can get more on that in just a moment. But how exactly hackers have been able to exploit the vulnerabilities as well is important, because there are two different ways to use Microsoft SharePoint. The first is via the cloud, and that hasn't been affected in this instance, we understand. But there is an older way that companies or businesses can use it as well, and that's through on-premise servers, and that's where the vulnerability seems to have arisen. So, as you said, these groups that have been identified, Microsoft is alleging there's Linen Typhoon and Violet Typhoon that have been involved. Both of those have been linked back to the Chinese government directly. There's also other groups possibly involved as well, and that includes Storm-2603. Microsoft also says that one's based in China. But we should note that we have got a response from Beijing. They are firmly denying any sort of involvement in this, but still, as we said, trying to really just come to terms with exactly what data could have been compromised.
And what we have to note is also that this comes at a time when Microsoft was trying to bolster its cyber defenses.
Yeah, it's certainly been at this effort now for quite a period. I mean, Microsoft has been the subject of a range of different hacks and high-profile string of hacks really in recent years. It is a very challenging task for a company of this size, how widespread the use of its software is as well. Also, the hackers and their techniques that they're using are pretty insidious, because even after this security fix has been rolled out, the people that we've spoken to for this reporting say that there are still vulnerabilities that would exist, because hackers could actually be able to still maintain access to any compromised servers, even if those servers have been patched or essentially repaired. So, yes, essentially able to continue to gain backdoor access. But to your point around improving security, I mean, Microsoft has made several strides in this space, making several high-profile hires, for instance, from the likes of the US government, for instance. Those executives are said to be meeting with senior executives on an ongoing, even weekly basis, to try and figure out ways to make this software more resilient.
Annabelle Drillers there with the latest. Well, General Motors shares are dropping sharply in the New York session after the company said that it suffered a $1.1 billion profit hit from President Trump's tariffs. But the CFO, Paul Jacobson, tells Bloomberg that plans are in place to ensure that their supply chain remains resilient amid mounting trade risks.
Obviously, tariffs have had some pressures. We've adjusted to them, but as we just said on our earnings call, we're 90 days into this, and our plans are still very consistent with what we said at the beginning, and we're going to continue to execute on that. We've got a strategy here that is both short-term and long-term. In the shorter term, we've talked about our ability to offset 30% of the tariff impact. That's through some cost austerity as well as some manufacturing changes and pricing. But we think that as we maintain our consistent pricing strategy where, we look at the demand for our vehicles and where that sits and our disciplined inventory approach, that we can continue to absorb that and reflect that in our traditional and sort of consistent pricing actions rather than going out and announcing big tariff-related increases, because we don't think that's necessarily good for the consumer as well. So pricing is a part of it, but nothing out of the ordinary or extraordinary from what our current strategy has been.
How much flexibility, Paul?
You know that we had a little bit. We had actually.
We break into these comments from President Trump when it comes to tariffs and that trade deal with Japan.
Then we took a few good victories with some little elections that took place. A couple of other things happened, and we ended up with 7. But we had 1. And the speaker said to me, we're 1 heart attack away from losing the majority. We don't want to be there. And I think the results of what we're doing together will give us a tremendous midterm. We're going to work together very hard. We're going to make all those robocalls for you, and we're going to pick it up, and we're going to really we're going to increase. I think we should increase by a lot. But despite this incredibly narrow margin that you've already fulfilled, think of this: more promises than any Congress in generations. There's been no Congress, and we've had some even where we were up quite a bit, but there's been no Congress like this Congress in terms of achievement that people can even think of. Now, we have to take world wars out. We can take a couple of things out, but basically there's never been anything like this. And we did this with very small majorities. And I want to thank John Thune also, because the Senate has been, and all of the people in the Senate, because they've been terrific also, working with Mike and everybody. But I especially tonight want to thank Speaker Johnson for doing a job that I think you could have done. I think he'll go down, and I think he's got a long way to go. He's going to go down as one of the greatest speakers at any time in history. And, and I say this, you needed a very precise personality to get these voters. If you had somebody that was just a little bit off, you were going to lose 20 votes. Then you couldn't lose any. So I just want to thank you. Everybody believes that too, Mike. Thank you very much. Great job. And Kelly is here. Hi, Kelly. Hi, Kelly. Also, a man of great courage, Steve Scalise. He's our majority leader. No, I've told the story so many times, but he was very brave. I saw him in the worst of times. I was there at his hospital late at night with his incredible wife, and we thought Steve was not with us. He was going to be a goner, and he was tough. And I actually think you look better now than you did then. If you want to, you look better now than you did before this horrible thing happened. So whatever the hell you're doing, you're going to have to let us know, all right? But he's great. And another guy who I've really gotten to like, and usually this doesn't happen because I used to have little arguments. I said, well, he's a tough guy. He's a nasty, tough guy. And then I realized how talented he was, how good he was. And we got to be, I think, really good friends. Tom Emmer, he's incredible, actually. But his wife, oh, there she is. But she liked me, and she said, you don't understand my husband. He's really, and she turned out to be right. His greatest asset. Thank you both for being so nice. Thank you. This is incredible. And every other member of Congress that's with us, we have almost pretty much a full contingent. Some of you have your spouses, and we appreciate, and that's why we appreciate what you've had to go through. These were late nights. And a lot of them, too. We had a lot of them. We had, if we turned off the phones at 3:30 in the morning, we weren't working very hard. It was really something. So I just want to thank you all. And we also have Secretary Scott Bessent. Is Scott here someplace? I think so. Scott, thank you very much, Scott. And we just came in from the Oval Office where a few people got to watch the negotiation with Japan. It was interesting. Doug Burgum, I think, might be here someplace. Doug, hi, bud, Doug. And I said to the Japanese trade representatives, and these were the top people, we concluded the one deal, Doug, and now we're going to conclude another one because they're forming a joint venture with us in Alaska, as you know, for the LNG. So I said we'll all do that together with Chris. Is Chris here? I don't know. Chris, right? If you could set that up, Doug, it would be great. But they're all set to make that deal now, so I think it's good. This was really the one they had to make, and we're going to make a deal with Japan on the LNG in Alaska, right? Okay, thank you very much. And Howard Lutnick, who was terrific. He was terrific. Howard. He'll never go back into private industry again because he's seen numbers that are so big. This deal is, they say, the biggest deal ever made, biggest deal ever made. And we have Europe coming in tomorrow and the next day. We have some other ones coming in. We're doing things that have never been done in this country before. And our country is becoming very rich again. And that's the way it should be. They're not taking advantage of us. And it's very good. But Howard will never go back into private. You know, he had a big company, but the biggest deal you've ever made is like a quarter of a line of the deal we just left, right? So it's a little tough. Scott Turner is here. It's terrific, Scott. Thank you. Thank you very much. Thank you, Scott. Good job. Good job, Scott. Thank you very much. In fact, Scott, come here. Come here. I want to just, I'm going to have Scott say grace. Give a little prayer, yes? I hope the television stays on. You know, they have a tendency to turn off, but I think that's good. What do you think, Brian, yes? Come on, Scott. And nobody does it like this man. He's better at this than he is at housing, but he's good at housing. That's great, Scott. Thank you, man.
How are you, sir?
I'm good.
Good.
Thank you very much.
Hi, everyone. Thank you, Mr. President. We're so grateful for you. I'm grateful for your sacrifice and for your heart for people, your heart for this country, your heart to do what's right no matter what.
Thank you, Scott.
And I'm so grateful that the Lord called us to be together for such a time as this. And so I really appreciate you. And I know I can speak for everyone out here that you are a tremendous leader, and we thank God for you. And we thank God for the First Lady.
Thank you.
And your family and everything that you've gone through for this country, and we're proud to stand with you.
Thank you, Scott. Thank you. Thank you.
Okay, let's pray. Father in heaven, we thank you. We're so grateful that we have this time to stand in your presence. Father God, we are at the White House. Father God, the most powerful place.
All right, we are just hearing there from President Trump speaking to a group of Republicans in the wake of course, this reception with Republican members of Congress at the White House, in the wake of what appeared to be successful negotiations with Japan on trade. We're still waiting to hear from Prime Minister Ishiba and, of course, the chief negotiator side when it comes to Japan. But President Trump had already previously, over the past half hour or so, announcing on his social media this deal of a tariff rate set at 15% with Japan. He also spoke about the pact calling for Japan to open up their country to car imports, trucks, agricultural imports, mentioned rice. These are all really key sticking points given these some eight rounds of negotiations we've seen the negotiators take place in the White House. So it'll be very interesting to see what those details are, given how politically significant they would be for Japan, how sensitive these sectors have been in the course of these negotiations. It also comes after the deal was announced with the Philippines as well, just days before his August 1st deadline for the imposition of reciprocal tariffs on dozens of trading partners. We also heard a little bit more detail when it comes to the sort of length and the difficulty of negotiations with Japan there, with President President Trump speaking at an event with GOP lawmakers just before, saying that the deal is a lot different to deals in the past. He did make mention of this JV when it comes to Alaskan resources on LNG. But, Shery, we really need to see more details as to what these key sectors are, and compromises, concessions, if they were made, what are they?
Yeah, what Japanese investments into the Alaska LNG project will mean, right? Finding that shortest route when it comes to U.S. LNG exports into Japan. This project supposed to cost about $44 billion, and that pipeline, of course, is a key question on how Japan actually deals with this. But let's discuss the broader trade deal, especially with those 15% tariffs on Japanese goods. And let's bring in our Japan economy and government editor, Paul Jackson. Paul, so we still don't have necessarily the details. President Trump saying that they will open the country, including cars. What could that potentially mean at this point?
I think it probably means relaxing some of the safety restrictions that limit some imports of American cars. I mean, I think one of the things that maybe President Trump is less aware of is there isn't that much demand for American cars because the streets are a lot narrower in Japan. You know, the American cars are very big, not so popular here. That's maybe more of a factor. But for the Trump, for his perspective, this is the kind of thing he wants to knock out in these grandstanding announcements that he makes. So it's like, yeah, they're opening up to cars and trucks and American farm products.
And what that means for the other side when it comes to the auto sector and the 25% tariffs on Japanese cars going into the U.S., right? If it includes cars, could that also mean a reduction on sectoral tariffs, which would be huge for the Japanese economy if it were true?
Yeah, now that's a key point. We don't have any details on that. And I think really, lowering those car tariffs, that's a more difficult ask for the Americans because, they've got that across the board with a lot of, with all the countries, right? So if you start doing piecemeal changes to those tariffs, that opens up quite a can of problems for Trump in terms of the consistency, although...
consistency is not one of those things that President Trump is known for.
But I think here, if we look at the key figure here, the 15% of reciprocal tariff figure, I think Ishiba can sell this as a pretty good deal. I mean, I think looking around at the trade deficits that the US has with other countries, if you look at Vietnam's trade surplus with the US is about twice the size of Japan's, and it got a deal for around 20% on the reciprocal tariffs. So I think anything above 20% was going to be considered a bad deal for Japan. So getting below 20%, I think, was a key kind of benchmark for the Japanese. So 15%, 10% was probably the best outcome. 15%, not bad. But we have that big question mark about where the auto tariffs are.
Yeah, those 25% tariffs. We also have aluminum and steel tariffs, of course. But as you said, of course, consistency is key. So what will that mean for other countries facing the same tariffs, right? Paul, stick around because we are getting now the market opens here in Japan, and you can see the Nikkei gaining 0.1% at the open. There you go, 1% pop at the open. While the Japanese yen is weakening against the U.S. dollar, and this is really interesting because we saw a pop higher against the greenback when the trade headlines dropped, but we are now seeing that increased pressure again as we continue to keep an eye on the JGB space as well, because we have the 40-year bond auction today that will test demand for the long end when it comes to those fiscal concerns around Japan. But the sectoral tariffs is something that we're watching with President Trump, as we mentioned here with Paul, that he's talking about opening Japan, including cars. But do cars also mean 25% tariffs on Japanese cars going into the United States? We're not quite sure as of yet. Take a look at how South Korea is also opening at the moment, because, of course, those negotiations are ongoing as well. We do have the Kospi at the moment gaining about 0.6%. As we are expecting those trade negotiations between the U.S. and also Washington this week. But let me return to Paul, because as we were mentioning, these are tariffs, blanket tariffs around the world. South Korea still facing 25%. When it comes to the Japanese economy, how much of a difference could 15% tariffs make, especially when it comes to a calculation by the Bank of Japan? Because we thought that this uncertainty over trade was perhaps one of the biggest blocks in getting to that normalization and that rate hike?
Well, as we reported yesterday, officials at the Bank of Japan were thinking, even with the election result and with the trade negotiations going as they were thinking they're still on course for this gradual rate hike cycle. So it is a matter of timing. With the clarity on tariffs, and as you've said, I mean, one of the key points is the auto sectoral tariffs. We still don't know quite what's happening there. We're assuming they're staying at 25%. But I think with this clarity on the reciprocal tariffs, that does make it easier for the Bank of Japan to decide on when it might go next. Now, of course, we are not talking about next week's meeting. They're going to pretty much hold as a slam dunk there, but this perhaps opens up the possibility of a move in the autumn at the earliest.
Paul, we are getting some level of confirmation when it comes to the Japanese side as well, and obviously it has been a long sort of journey when it comes to the chief trade negotiator. We're now hearing from Ryosei Akazawa saying that his mission has been completed. No sort of details yet in terms of what that means, but seemingly a confirmation that this trade deal, at least sort of in essence, has been completed. I do wonder, when it comes to a domestic point of view, obviously these are really sensitive sectors that President Trump has sort of teased have been given access to for the US. But how does this get sold domestically, particularly at a time of such domestic political strife for the ruling party?
Well, Heidi, I think this a message from Akazawa that his mission has been completed. Hey, this could be linked to the future of the Prime Minister. Now, Shigeru Ishiba has said he would soldier on because he had responsibilities, and one of them was trade. We are hearing reports that he's going to link his future to developments in the trade negotiations. Do we have any developments in trade negotiations? Yes, I think we have a pretty big development today. So I think all eyes now are going to be on the Prime Minister of Japan and whether he decides this is a clean moment for his legacy after a brutal election result to decide, right, here's a clean moment where I can deliver something to the people and leave with dignity.
Paul Jackson, Bloomberg's Japan economy and government editor. As we continue to sort of try and decipher what we've heard so far, a lot more from President Trump and the US side, and very little from the Japanese side so far, than the chief trade negotiator saying on social media that his mission has been completed. Let's bring in, from the market's point of view, Kelvin, who's a regional CIO at UBS Global Wealth Management. Kelvin, great to have you with us. And of course, we're getting a lot of moving developments when it comes to this trade deal. 15%, a lot of allusions to potentially more market access to very sensitive sectors like autos, trucks, agriculture, rice. We don't have a great deal of detail. Does this create a new moment of opportunity for Japanese assets that have been sort of so weighed down both by the domestic fiscal and political situation, but also these broader tariff concerns?
Well, I think the political situation and what has actually had transpired just a couple of minutes ago basically sets back the BOJ's decision to actually hike rates this year. So we don't expect the BOJ to actually hike rates this year, largely because even with the 15% tariff, we do expect the Japanese economy to actually come off by about 0.3 to 0.5% in terms of GDP growth for this year. And with the yen basically now rallying a little bit as well, we do think that it's going to be really hard for the BOJ to actually further hike rates this year. Auto exports actually comprise about 30% of Japan's total exports to the US, and therefore any potential tariff there will likely actually hurt its exports to the US. And of course, as we all know, where the Japanese auto exports are concerned, that's actually also been hit pretty badly in terms of the other countries as well, because a lot of the ASEAN countries in particular are basically buying Chinese cars today and no longer as much as the Japanese cars. So I think even if you think about the auto tariffs to the US, even at 15%, I do think that the auto exports will likely be hit quite significantly.
What broader opportunities do you see at the moment, particularly given that these sort of ongoing concerns about JGBs well, global bonds at the longer end in general seems to persist even with some of these developments on trade.
Yeah, I think with the long end of the curve actually going up, what's going to happen is that a lot of the Japanese pension funds, retirement funds and insurance companies will likely find it less attractive to actually convert from the yen into the dollar to actually buy the US treasuries on a longer term, on a longer end basis. So that basically means that there's going to be less demand for the US dollar. In turn, that means that the Japanese yen could likely be a little bit more supportive on a medium to longer term basis, given the fact that the outflows from the Japanese yen into the dollar has been one of the main causes of weakness in the Japanese yen over the last 2 to 3 years. So keeping that in mind, the Japanese yen could potentially actually hover at around 144 to 145 for the short term. But on a medium term basis, we do think that the Japanese yen will likely actually break 140 and head towards the 138 level. So that basically means that the Bank of Japan again has less incentive to basically hike. Now on top of that, the loss of the ruling LDP in the elections over the weekend basically means that the possibility of a cut in the consumption tax could potentially actually be get louder as we move on to the end of the year, largely because of the fact that with the ruling coalition's loss, there could potentially be a change in the leader of the LDP as well. So with that in mind, it's going to be very hard to actually expect the BOJ to actually hike rates over the next 6 months.
So you're not actually expecting the Bank of Japan to move forward its next rate hike, despite the fact that we have more certainty on the trade front, because we actually have now inflation accelerating above 2% for core CPI in the last 3 years. So we thought that perhaps was only the economic uncertainty that was holding the BOJ back. And if the BOJ doesn't move, what are the implications for also Japanese stocks? Because, of course, we have seen that momentum and optimism given, of course, loose policy here.
Well, again, it's largely because of the Japanese yen, and I do think that where the situation is concerned, I do think that now the Japanese yen will probably hold at these current levels and perhaps actually strengthen a little bit on a short-term basis. And if that happens, then obviously inflation on a medium to longer-term basis will likely be a lot more muted. Don't forget that the weakness of the Japanese economy is probably likely to be more sustained, given the fact that you have a 15% tariff now coming in. I don't think that's necessarily good news for Japan, where the 15% tariffs are concerned. I mean, certainly it's better than the 25% that was set originally, but again, with 15%, and if that includes the autos as well, the auto sector as well, then it's going to make it really, really hard for the Japanese economy to actually grow this year. And in fact, we do think that perhaps it might actually have to take a 0.3 to 0.5% cut. Now, on top of that, the Japanese central bank can also basically lower its quantum where the tightening is concerned, given the fact that, they are basically doing quantitative tightening at the moment, allowing more of the Japanese bonds to actually roll over than easing and then buying at the moment. So I do think that with a tighter supply of the 10 years coming through, that perhaps where the yields are concerned, there's actually room for the yields to actually go up a little bit more, and that in turn will likely actually be more of a tightening phase than anything else. So if that's the case, then obviously the Japanese yen has room to actually strengthen further from here.
Kelvin Tay, Regional CIO at UBS Global Wealth Management, with the outlook for the Japanese markets. Great to have you with us as we keep an eye on those auto stocks. We are seeing a huge jump when it comes to Japanese car makers. Of course, we are expecting more details coming from that deal with the United States. All we know at this point is that President Trump has said that Japan will open to trade, including cars. We are hearing from Prime Minister Ishiba that he'll be actually getting further details from the top trade negotiator, Akazawa, and that he will be holding calls and meetings as needed with Washington. At this point, we don't have the details when it comes to those 25% car tariffs on Japanese autos going into the United States, but you can see already that some of those that are heavily exposed to the United States market are gaining ground. Toyota, for example, fifth of its business is coming from U.S. sales, Heidi.
We are also getting some breaking news when it comes to further developments in this Microsoft SharePoint hack and breach story. The US agency responsible for the maintenance and design of the nation's cache of nuclear weapons was breached by a hack of Microsoft's SharePoint document management software. This is according to a person with knowledge of the matter. We understand that no sensitive or classified information is known to have been compromised in the attack on the National Nuclear Security Administration, according to that person. Microsoft, of course, has put the blame on Chinese state-sponsored hackers for those attacks, exploiting flaws in its commonly used SharePoint document management software in a campaign that has breached governments, businesses and other organizations around the world. We're now hearing that the US agency responsible for maintaining and designing nuclear weapons in the US was amongst those groups that were breached by the Microsoft SharePoint document management software hack. So this group has a mission that includes providing the US Navy with nuclear reactors for submarines, responding to radiological emergencies, amongst other duties. It also plays a key role when it comes to counter-terrorism and the transport of nuclear weapons around the country. So this is something that we've been monitoring very, very closely in terms of the exploitation of that SharePoint vulnerability when it comes to some of these departments and government units that are being affected, including the US Nuclear Weapons Agency. More ahead on the Asia Trade, this is Bloomberg.
We're getting some more updates when it comes to the Japan-U.S. trade deal. Local media NHK is saying that the U.S. has set tariffs on Japanese auto imports at 15%. That will be down from the 25% sectoral across the board that the U.S. has imposed on other countries as well. And we have seen, of course, that upside when it comes to Japanese equities, especially in automakers, with the topics now gaining more than 2%. Even the Japanese yen reversing some of those earlier declines against the U.S. dollar and gaining about 0.1% at that 147 level. We continue to hear from Prime Minister Ishiba as well that he needs to look closely at the details of this agreement. We're just getting some trickle of news when it comes to those tariffs, with President Trump imposing blanket 50% tariffs on Japanese goods, and local media reporting 15% tariffs on Japanese auto imports as well. Now, the Asian Development Bank has revised down its outlook for economic growth in the region to reflect these elevated risks when it comes to U.S. tariffs and, of course, geopolitical risks as well. Growth this year for developing Asia, including China, was cut to 4.7%, with the outlook for Asia falling 0.5 percentage point to 4.2%. The only major economies getting higher forecasts are Vietnam and Taiwan. Joining us now is Chief Economist Albert Park. Albert, always good to have you with us. And of course, Vietnam is one of those countries that finally got a U.S. trade deal, about 20% tariffs on that economy. We're getting news now of the Japanese trade deal as well. Does this brighten the overall picture for Asia?
Not really. I mean, the forecasts that we've released today are based on the tariffs that existed kind of prior to yesterday. It doesn't account for what's happened in the Philippines and in Japan. So if you think that the new agreements, or for countries that don't get an agreement, tariffs will actually revert to higher rates than the 10% across the board, then that's additional kind of headwinds for growth in the region. Actually, that may have been a typo. Our forecast for Vietnam has also been downgraded this year from 6.6% to 6.3%. All across Southeast Asia, which, as you know, is really the most important export-dependent region of Asia. We're seeing declining manufacturing, we're seeing a loss of business confidence, really the crippling effects of this continued uncertainty. Hopefully, by the end of the week, by August 1st, there'll be clarity. And even the greater certainty at least will allow businesses to plan more coherently. And hopefully we can see some benefits of that.
Yeah, good thing that you mentioned that, Albert, because in fact, Southeast Asia's growth outlook is the largest downward revision among sub-regions for the ADB. Then where are you seeing at this point the bright spots?
The bright spots in the region, South Asia continues to be the fastest growing region. India, we're also downgrading slightly by 0.2% from 6.5 to 6.3%, but that's still a pretty decent growth rate. And although we're downgrading Vietnam, Vietnam is still the fastest growing country in Southeast Asia. The other is Philippines, which we're also downgrading down to 5.6%, but that's also relatively high for them and compared to other countries in the region. So the competitive economies still have advantages and are still performing. We've seen consistent kind of a resilience of domestic demand and sentiment, but these headwinds from the external environment are creating, I think, real concerns and real headaches. And, you know, even though there's a little bit of a relief that the tariffs are not the very high reciprocal tariffs, which, as you know, were above 40% for many economies in Southeast Asia, there's still high tariff rates. I mean, 19% tariff rates on Indonesia and Philippines, 20% tariff on Vietnam, and 15% tariffs on Japan. These are still very historically high tariff rates, which I think will have their effects. What's been interesting to me is that equity markets still have been fairly rosy about the changes. We know when the Liberation Day first was announced and those high tariff rates were publicized, that the markets reacted very negatively. But right now we see a very strong recovery in equity markets. I'm not sure they've priced in fully all of the effects that are likely to occur from the disruption of higher tariff rates. It's been a bit hard to track and forecast because there was a lot of front loading of imports to the U.S. anticipating higher tariffs in the future, and that has made kind of growth look better everywhere than perhaps we might see later once these higher tariff rates really set in permanently or for a longer period.
Lots of concerns about complacency from investors at the moment, right? So, but I wondered, one of the other things is that the sort of longevity of tariffs, right? Even if 19%, 15 to 19% are sort of on the lower end of what we expected from what we heard on so-called Liberation Day, do you worry about the longer-term compounding of tariffs? Because we know that once they're implemented, they tend to be pretty sticky and difficult to get rid of.
Of course, and the uncertainty, we've seen so many changes in announced policies coming from the U.S. I think one thing you've seen in response to that is that other countries are really looking to diversify their trade partners and deepen their trade integration with more reliable trading partners, so to speak. So ironically, we could see greater integration of countries, for instance, within ASEAN, with each other or with other regions of the world, including Europe or the Gulf states, et cetera, as one kind of way to hedge against this continued uncertainty, which, of course, as the longer they last, I think the more sticky they are, partly because of the policy persistence, but also because, you know, the effects of investment choices, people will start to really reorient supply chains if these tariffs last for quite a while. And then it's not that easy to unwind those very quickly.
Your projections when it comes to headline GDP for 2025 for China is unchanged. Does the trade truce sort of make you more optimistic, sort of more sanguine, I guess, about the possibilities for Chinese growth, given that we know that there's a lot of domestic structural issues that they're already contending with without the tariff concerns?
Right. I think China continues to face both external and internal pressures, but we saw pretty robust growth numbers from China in the first half of the year. They grew at 5.3%. So our 4.7% growth for China, we felt, is a pretty fair read on what we can expect. And we know that the government will be committed in terms of policy levers to aggressively reach their growth targets. They have been expanding both on the monetary and fiscal side. And because inflation is so low in China, it still gives them space to be fairly aggressive in trying to address growth concerns. But we know property prices continue to decline, even in first-tier cities, although not as fast as in the second- and third-tier cities. We still have persistent problems of consumer confidence in China. The external trade environment is more stable right now, but again, we know that those also have a deadline, right, the current agreement. So it's really not clear what will be the longer-term arrangements.
Albert, always great to have you with us, Albert Park, Chief Economist at the ADB. More ahead here on the Asia Trade. This is Bloomberg. Well, we do have more musings from President Trump when it comes to the fate of Fed Chair Jay Powell. He's saying that he won't be there for much longer. He's not going to be there for much longer, only going to be there for a short while, he says, at an event with GOP lawmakers. His term, of course, ends in May. His separate term as Fed governor ends in January 2028. This comes at almost the same day that we've heard from Treasury Secretary Scott Bessent saying that he sees no reason for Fed Chair Powell to step down, saying there's nothing that tells me that he should step down right now. He thinks that Powell should be able to see out his term until it ends in May if he wants to. He also believes some of the non-monetary activities, including that scrutiny over a renovation project, should be reviewed. We did see a bit of a sort of sigh of relief when it comes to US Treasuries gaining for that fifth day, as we heard from Scott Bessent seemingly offering support for Fed Chair Powell. That reassured investors, but of course now we're hearing President Trump renewing his ire when it comes to the Fed Chair.
Yeah, at least some relief for markets when it comes to that Japan-U.S. trade deal. We're talking about 15% tariffs on Japanese goods, and local media now reporting that we might also get 15% tariffs on Japanese auto imports into the United States. So you can see that automakers have been doing pretty well. And you can also watch that yields across Japan are gaining ground. Of course, we have seen the pressure on the long end as well for quite some time as we're headed towards the 40-year bond auction today. But really, it's about that trade deal and the automakers gaining at the moment that we're paying attention to, given, of course, the ongoing negotiations. Japan is having also an EU summit this week, as President Trump is also talking about European countries buying their military equipment, negotiations all around. This is Bloomberg.
Well, Asian shares are broadly on the rise after the confirmation, not with a great deal of detail, but certainly a confirmation of a trade deal with Japan. President Trump alluding to access points, including the likes of autos, agriculture, rice, really some of the most critical and politically sensitive, domestically sensitive sectors that have been negotiated over these some 8 rounds of the visiting trade negotiators talks in the White House. At the moment, we're seeing the Nikkei 225 there popping by 1.7%. The TOPIX has also been climbing in the early part of the business day, finally looking like we're seeing sort of the momentum to burst into a higher trading range. Not so much when it comes to JGB futures, so that boost to equity Shery being seen as a clear negative when it comes to Japanese bonds.
Yeah, let's bring in Kenichi Kawasaki, professor at the National Graduate Institute for Policy Studies in Tokyo. We try to understand this trade deal. It's really great to have you with us. We don't have a lot of details as of yet, but what we understand is that 15% of tariffs will be applied to Japanese goods, and that could include, according to local media, 15% on Japanese autos as well. Can Prime Minister Ishiba sell this as a good deal to the Japanese public?
I do hope so, even after some miserable results at the upper house election over the weekend. But this is really a good, positive, unexpected surprise to me that Japan agreed on U.S. tariff negotiation this morning in Tokyo time.
What are still some of the key sticking points for the Japanese public? We've seen everything really discussed, from imports of rice to, of course, car imports from the U.S. as well. What is the issue at play right now that could become more sensitive for the Japanese public when accepting this deal?
Now, first of all, we need to acknowledge that this event should boost Japanese economy at the macro level, rather than talking about sectoral aspects like on rice and autos, since 15% reciprocal tariff lower than 25% globally should boost Japanese economy rather than adversely affect Japanese economy at the macro level. That said, For auto issues, I need to double check whether Japan would benefit 15% tariff or 25% universal tariff on auto sectors. But if it were 15%, that would again benefit Japanese auto industry, meaning lower than global average universal baseline tariff. On the other hand, you may worry about adverse impact on Japanese rice production if Japan removed all tariff on imports from the U.S. But according to my estimate, Japanese agriculture production would fall by 30%. Japanese agriculture employment would lose by 17%. That said, still, Japanese agriculture tariff removal, including that on rice, should boost Japanese economy at the macro level.
You've said that the impact of tariffs would be sort of marginal when it comes to overall GDP. How much impact does it have on what we expect from the Bank of Japan?
Yeah, it may be marginal, you may say. According to my updated estimate, Japanese real GDP could be boosted by nearly a full 1% point, although I need to double check. But that is still a sizable amount at the macro level under the current Japanese growth rate around 0.5 or 1% point. And at the sectoral level, the impact could be much larger than at the macro level.
When it comes to the sort of broader expectations from the Japanese public, Shery sort of asked the question as to how acceptable would this be? How politically acceptable do you think would be in terms of the uncertainty over domestic policy that we now face, given the weekend's election results and given the presumed influence that we see from opposition policymakers too?
Yeah, I'm an economist, so that's why I may not be in a good position to talk about the political issues of the upper house election or others. But there could be two in my mind in terms of the impact of rice tariff removal. Talking in economics, that would definitely benefit Japanese economy at the macro level. But it seems to me that still we Japanese society may still have some strong objection to open Japanese rice market for imports from overseas in considerations of safety and others. But on the other hand, you may know that currently Japanese rice price in the market have been more than 2 times higher than the year before. So if we could import rice from U.S., then that would mitigate current hyper rice price inflation in domestic front. So that would be good and yes and no in Japanese society for the acceptance of removing tariff on imports of rice from the U.S., in my view.
What's been also difficult for the Japanese public has been the weaker Japanese yen, right? And we saw a little bit of a pop. We're continuing to see a little bit of strength right now after that trade deal announcement. But we're still hanging on at around that 146 level against the U.S. dollar. Is the Japanese yen mostly right now guided by the Bank of Japan and what the Fed does, and how much of these trade uncertainties and the stability that we might potentially see on the tariff side of things, how much of that could impact the yen eventually?
Yeah, so far, in my view, weaker yen could be attributed to, say, delayed policy rate hike by BOJ after the COVID-19 monetary expansion globally. So that has weakened Japanese yen over the year or two, and that has caused Japanese import inflation currently at around 3% in terms of CPI inflation. That's why I do like to see some adjustment by the BOJ on monetary policy making rather than tariff or trade policy making to make Japanese yen stronger. According to IMF, PPP rate is estimated to be around 90 yen per dollar, which is 60 or 50 yen per dollar weaker than current rate of 150 or 40. So that's why I'd like to see some adjustment in the exchange rate market in terms of yen and the US dollar. And that would again mitigate Japanese current import inflation, good for Japanese economy at the macro level.
Kenichi Kawasaki, really good to have you with us, professor at the National Graduate Institute for Policy Studies in Tokyo. As we go through that trade deal with the United States, we're also following the JGB space. We continue to see yields rising across the board. And this, of course, as we're headed towards that 40-year bond auction here in Japan, the first test of investor appetite for super long debt, especially after the historic election defeat for Prime Minister Ishiba in the upper house election this weekend. For more, let's bring in executive editor for Asia Markets, Paul Dobson. Paul, so how consequential will the 40-year auction be at a time, of course, when we've seen a lot of volatility in the JGB space and investors are still digesting what this trade deal with the United States will mean?
Yeah, hi there, Shery. There will be a lot of focus on the auction, despite the fact that the trade deal and the moves in the equities market are kind of grabbing the limelight right now. A lot of attention on it because people are worried about the lack of demand for those long-term government bonds, and that's what's been pushing up the borrowing costs as represented by the yield. So we'll be focusing very closely on the demand and supply metrics. I think today's news is interesting in that context. Maybe it pushes the BOJ closer to another rate hike at some point. All things being equal, that could be more positive for long-end bonds if it brings down inflation. But on the other hand, higher rates across the curve could be a negative as well. So kind of jury's out a little bit on that one. Also, the stability of the government is another matter that's in play, and whether having got the trade deal done, that moves Ishiba closer to the exit. If that were the case, you know, him being seen as more fiscally responsible than some of the other factions vying for power in Japan, that could be bad news for the bond market as well. So there's a lot for investors or potential investors in those bonds to take into account as we get there. One other consideration is for overseas investors sitting on dollars. Things are looking very attractive at the moment because of the differentials between Japanese and US markets. You can get a yield pickup. So if you're holding dollars, you could get equivalent of a 7% plus yield on those 40-year bonds if you bought into them using your dollars and converting into yen. So that makes it more attractive to overseas investors. But what's really crucial is how strong the demand is from the domestic side and from the life insurers in particular.
Yeah, when it comes to the yen carry trade, is this something that's going to be sort of propelled ongoing from the election result and some of the domestic political implications?
There are a bunch of hedge funds talking about it, getting more interested again, and some of the market metrics that are out there, including the futures positioning, would tend to suggest that that is back on. So people borrowing the yen in order to invest overseas, where you can get higher interest rates on your deposits. That's because short-term interest rates in Japan, at least, are still very low. And there are other things moving in favour there, depending on how fast the BOJ moves to hike. That would make a difference for people putting on that carry trade. The sort of consensus is that it's going to go slowly, right? So interest rates are only going to be lifting very slowly. And so that doesn't take away too much of your sort of benefits of borrowing in yen. And on the other hand, the chances of earning higher interest rates overseas are still there. Plus, implied volatility for the yen has been falling pretty rapidly, making it more attractive. Again, that helps you to buy cheaper options to hedge your risk. And it also gives you more certainty that we aren't going to see sharp swings in the currencies that may undermine the sort of slow accumulation of money that you're supposed to get from putting on the carry trade. So people are looking at that again as another thing to throw into the mix. I don't know whether the trade deal, if it turns out to be positive for the yen, might make that uncomfortable in terms of the timing if it does support the currency, at least in the short term. So that's one thing that those currency traders eyeing that positioning may need to take into consideration.
Bloomberg's Paul Dobson there with the market reaction to all of this breaking news that we've had so far this morning on trade. We do have more ahead on the Asia trade. This is Bloomberg. Take a look at what we're watching when it comes to emerging market FX, of course, amidst the flurry of trade deals that we've had so far this morning, including that trade deal that was secured with the Philippines, with President Marcos visiting the White House, and of course also what we're seeing from Japan there as well. The dollar has been paramount when it comes to what we're seeing with the fall in the US dollar, US yields remaining the focus on the Fed. We also had some further negativity when it comes to commentary from President Trump on how long Fed Chair Powell might last in the job. Well, President Trump says the US has reached that trade deal with the Philippines. It's a 19% tariff rate on the country's exports. He announced that agreement after meeting with President Ferdinand Marcos Jr. at the White House. Our Bloomberg reporter Cliff Van Zon joins us now from Manila. So at 19%, I mean, there's very little in it in terms of coming down from 20%. There was also 17% that was sort of flagged earlier. Can this be sold as a win?
President Marcos described this as quite a significant development already, even with the marginal reduction. And also speaking with Philippine media in Washington, the president says that the Philippines will open the market for certain U.S. products, including cars, and also Philippines will purchase more soy and wheat products, as well as medicines from the United States. So those are at the moment, those are the information that we have with respect to the trade understanding between the U.S. and the Philippines following President Marcos' visit to the White House.
In terms of what was discussed on security and defence, these are obviously two long-time allies, and we know that even in recent months we continue to see encounters between China and the Philippines in the South China Sea. Was this discussed at all?
Yes, so I think the defense and security side is something that's also closely watched during this trip by President Marcos. During their meeting at the White House, both leaders discussed that aspect of their relationship. We also saw a reaffirmation of their long-standing alliance. We know that President Marcos, under his administration, bolstered the defense ties with the United States, in part due to Manila's territorial dispute with China over the South China Sea. So Marcos, during his meeting with President Trump, described the United States as its strongest and most reliable ally. President Trump, for his part, says that Philippines is an important nation militarily, and the two countries will work together militarily.
Manila reporter Cliff Benson there with the latest on those trade negotiations. As we continue to follow some of these other talks, Thailand now saying that it's close to a deal with the U.S. to lower a threatened 36% tariff rate before the August 1st deadline. The Thai finance minister says talks should conclude within days, and he expects a reduction in line with their Southeast Asian neighbors. Thailand has offered to increase purchases of U.S. goods and expand zero tariffs on American imports. The Trump administration says its trade deal with Indonesia will unlock $50 billion in market access. An official tells Bloomberg that Jakarta will eliminate all non-tariff measures on U.S. goods and drop barriers that could have hit American tech companies. President Trump announced the deal for a 19% tariff rate last week, but we're told it will only be implemented in the coming weeks. China has suspended its antitrust investigation into the local unit of DuPont ahead of next week's trade talks with the U.S. in Stockholm. The inquiry was among a flurry of countermeasures Beijing announced in early April to hit back against President Trump's so-called reciprocal tariffs on Chinese products. We have more ahead on the Asia trade. This is Bloomberg.
Well, we have been learning more details about the Microsoft hacking targeting its SharePoint software. A source telling Bloomberg now that the US Nuclear Weapons Agency has been affected, with Microsoft earlier saying that Chinese state-sponsored groups were to blame. Let's bring our Asia Tech correspondent Annabelle Jewellers. So, Annabelle, according to people with knowledge of the matter, what do we know?
Yeah, exactly. I think we do need to caveat this. It is according to sources or people familiar with the matter. We haven't actually had any confirmation just yet from the direct agency affected. But what we're talking about here is perhaps one of the most high-profile government departments that are caught up in the hacks. We're talking here about the Nuclear Weapons Agency. It sits technically under the Energy Department, which has said at least some of its systems have been affected here. But in the case of the NNSA, there's clearly a lot of concern about the type of data that could have been accessed, because this is the government agency that has a broad mission, but basically it's responsible for making sure US weapons, or nuclear weapons rather, are safe, that they're secure, and also that they're effective. So again, clearly there'd be a lot of data here on what are the US stockpiles, what are their current capabilities as well. So the data that seems to have been accessed, it doesn't seem to pertain to that, as what we also understand that no sensitive or classified information has been compromised at this time, but we are still trying to understand the extent of the damage, which doesn't just pertain directly to the NNSA, but to other government departments that have also been targeted in this, because there's groups like the Education Department in the US, Florida's Department of Revenue, the Rhode Island General Assembly. I mean, a lot of different government departments caught up in this, plus government departments in Europe and the Middle East. So it's clearly very widespread, and businesses affected as well.
How do we understand that this managed to happen, in terms of how widespread it is, particularly at a time that we understand, the overhaul of cyber and security has been so paramount?
Exactly to your point. I mean, Microsoft has been facing a string of attacks or hacks in recent years. They've made key hires to try and bolster their capabilities in this space. We understand those security personnel are meeting with senior executives on a weekly basis to try and make the software more resilient. But still, I mean, Microsoft's software is used all around the world. It's so widespread that it does leave it open to certain hacks. And this is what we're hearing now, that essentially the vulnerabilities in this software, Microsoft SharePoint, it's used to sort of manage data as well as for industry collaboration, has been affected. And the way it's been affected is how it's been able to be accessed. So you can either access Microsoft SharePoint via the cloud, or you can also do it on-premise. And that's where the vulnerability seems to have arisen. Microsoft, as we've been talking about, has identified what they say are the groups responsible for this. Two hacking groups in question are particularly important. There's Linen Typhoon and Violet Typhoon. Both of those have been linked back to the Chinese government. A third one as well is identified as Storm 2603. Microsoft also says that's based in China. China has responded, saying that they don't have any involvement in this. They firmly denied that, pushed back on it. But still, Microsoft, as we said, really trying to improve its credibility of its software as well by making those key hires and by putting it as a priority for the business.
Bloomberg's Annabelle Jewellers there. Let's take a look at how we're shaping up when it comes to futures trading both in the US and going into, of course, the start of trading across Greater China. We've seen quite a bit of a boost to sentiment when it comes to this Japan trade deal, of course, also the Philippines trade deal as well. But Japan has really been front and centre, despite, of course, still waiting for a few more details on exactly what sort of market access President Trump was talking about with regard to these deeply politically sensitive and domestically sensitive areas like rice, like agriculture, as well as autos. This is a picture as we see S&P futures looking marginally higher there. We're also seeing Taiwan futures looking like a pop of about 0.5%, and FTSE A50 China futures last trading higher by about 0.25%, Shery. But really, the key focus is when it comes to this rally that we see in Japan.
Yeah, the Nikkei now seeing its best day since July, highest since July of last year. But of course, we continue to watch the changes in the Japanese government after the upper house elections and the historic defeat of Prime Minister Ishiba's LDP. But when it comes to today, it's all about the trade negotiation with the U.S., resulting in those 15% tariffs on Japanese goods. And according to local media, 15% also on auto imports from Japan. And we are seeing massive gains when it comes to Japanese car makers, including Toyota, seeing its best day since August last year. Subaru seeing its best day in more than a decade, as we continue to watch Honda also gaining more than 9%. Remember, the auto sector employs more than 5 million people here in Japan. That's about 8% of Japan's workforce. It generates around 10% of GDP. So this sector is very important. We still need to get more details. Prime Minister Ishiba saying that even he needs to look closely at the details of the agreements achieved by his top trade negotiator, Ryoko Akazawa, in Washington. But in the meantime, in the JGB space, we also have a 40-year bond auction that will be following as we see yields rise across the board. That's it from the Asia Trade. The China Show is next. This is Bloomberg.